Welcome to Java. Thank you for joining me. It is November 7th, 2024, and it's Thursday. So we've got a lot of ripples still working out in this market this morning. There's quite a few underlying things that we need to discuss prior to the market to open to get you ready, not just for what's happening today, but going on forward. So with this, I would also like to mention that if you have an interest at all or just questions about cryptocurrencies, we're going to have a conference. Again, it's going to be 5 p.m. Eastern Daylight Time and just after Greg's live stream on the hour. So basically, if you would like to join us there, it's going to be headed by a few crypto guys there. If you have any questions or if you would like to consider getting in the space, it's a good way to ask people that don't have an interest in trying to get money out of you. So feel free to join us there, leave in the comments or ask me if you need a link. I'd be happy to get you in there. So with that, let's go into what's going on in the markets. Last night and this morning, as I said, quite a few, and I know this is quite a bit, little overwhelming, but good news is we've got the MMRI is back up and working. So kind of feel in a way that I can be lazy, at least in one factor here. So it has risen significantly to 89.4 right now. These are based on the elements are, of course, the 10-year yield, which had a spike the other day. Now, I'm going to speak a little bit more about why and the underlying factors with this and how it's going to affect the overall. Now, we've also got the relative strength of the dollar. Both of these have pulled back slightly from yesterday's spike, but they're still higher. So with this, as I said yesterday, the expectation was in the fear. We've gone all the way through, blasted through, and a fear greed meter has gone straight up to the greed section now at 59. So markets basically had a major sugar rush after the election, still kind of winding out a bit today in continuance. So with this, cryptocurrencies also jumped, hitting again Bitcoin new all-time high, has retraced a bit from that, but still above the 75,000 level for now. So we'll speak about this a little bit later as well. So with this, we're looking at the stock section as far as your trades today, still in the green. So yesterday had kind of a banner day, good for the stocks across the board. Volatility index dropped significantly, still down 4.36. Now, this is a major factor. This between watching the bond differences, 10-year yield. We'll talk about that a little bit more in a bit. So with this basically hammered the price of gold down below the 2,700 level. However, this has been a significant run late in this year, and I believe this is going to recover. Gold will continue to go higher. Perhaps not today. We're going to get more of a retracement first. But in the long run, don't shake out. If you're holding this for the long term, you're physical, not financial advice. I am not selling mine. It's going to hold pretty well in the long run. We basically are looking at a lot more inflation in the future, and we'll cover that in a little bit more as well. So with that, we've got the futures basically also in agreement, not nearly the rally we had yesterday, but still in the green, a little bit more to continue. So with this, there is always risk in this market. Nobody knows for sure. So we've still got gold and silver under a bit of pressure. Silver holding strongly above $31, not even touching the 30, but we've got crude oil still above $70. We've got some interesting changes in the Middle East that could affect this price. We'll talk a little bit about that at the end. Now, there, as I said, so much to speak about. The first is that there are changes coming to the Fed in this new presidency coming in. Now, at a minimum, the new president-elect can make 2 appointments to the Board of Governors at the United States Fed. So with this new leadership, there's going to be some other things going on in the background. They are having a press conference after the finishing of their 2-day meeting ends today. So we will hear from the Fed. Right now, everything's still green, although just slowing down on the advances. Now, we've got a major currency war going on, and the bond markets right now are in basically plunge protection mode, are basically being managed. Now, major spike in the yields as there is sell off in the bond market. Now, remember, as they're selling off, the price of bonds go down. That's what spikes the yields in order to entice people to buy them back. Now, major sell off in this debt market, that is the yield spike. So, along with this, we've got banks facing growing risk as double defaults in commercial loans mount. Now, as these borrowing rates go up, of course, they are losing profits. So there's going to be more risk again in the real estate sector, particularly the commercial real estate, still not out of the woods. So with this, we've got our Fed is speaking today, but Bank of England voted 8-1 to cut their interest rate by a quarter point now, despite what they said about them not working, not collaborating, they are. So we are expecting similar. United States quarter point is what is on deck now. We've got the US SEC adopting new rules requiring central clearing in the US Treasury market. Now, this was a while ago. I left the date here, it's December, the end of last year, basically 2023. Why is this significant? Is basically as a central clearing market, they are now much larger in control of the buyers, the sellers, keeping the numbers in and management, if you will. So that's why I'm saying Plant Protection Team basically was originally for the stock market. They do manipulate the markets. If you don't realize that, you probably shouldn't be trading. Don't want you to be doing this blind. You're going against algos and you're also going against a massively manipulated market. So please understand that with this going on, it's all managed through the debt market. So with this, looking forward, we've got earnings today. Basically, these are for today prior to market, after the close, and then also Friday morning prior to the market open in case you want to set up your trades for these. Now, we've got a few larger ones in here you may want to pay attention to, and I'll just let you take a look at these. But the newest thing in business survival in this current atmosphere that we're going into with the rates, with inflation, all of these things going forward that are crushing mid-sized, smaller businesses is basically not a full merger, but teaming up. So one of the latest here, we've got two restaurants that have been long-time chains in the United States have teamed up, and that's Applebee's and IHOP. But you're going to see more of this trending forward, not just in restaurants. The smarter ones will start doing this and co-branding. But this has been going on with larger businesses that utilize each other's services as well. Key point here being Boeing. They are also in the news again that Boeing and Airbus might secure $4 billion in a jet orders split from Taiwan's China Airlines, because there's the new presidency coming through. They're talking about tariffs going forward and etc. So with this one, you watch the partnership is Boeing, but GE was one of the engine manufacturers. So you're going to watch these larger companies as they rely on each other. We're watching some of the suppliers of Boeing under pressure today. So some of their suppliers, not necessarily GE, but going forward, basically, another method that they're going to use, we spoke a bit about this in the Discord group last night, trade deficits. So when you're in a currency war with your trade deficits, you can, in essence, control the prices for the goods and supplies that you are getting into your country. When you need these, you can basically shift the rates and get your prices higher as you're selling and lower as you're importing. So United States trade deficit up 19.2% in September, highest in a couple of years. Basically, there's an $84 billion difference right now, and they're saying most of that is in the semiconductor industry. The second largest industry that it is in is basically defense sector. We are still in a war economy. Now, United States importing billions of dollars of chips every month. This is basically Malaysia's larger part of this. And the move to get these into the United States, probably a good one. So, with this, all of the sanctions that continue, this is another basically war between the currencies and also trade, metal sanctions on Russia. Now, Russia's major supplier to the West for all of their manufacturing, basically for all the auto industry, also the defense industry, and now putting sanctions on them, as we know, basically just raises the prices on everything that has to be purchased back. So, shooting themselves in the foot, so to speak. With this, we've got some other things that are going on globally that do affect basically domestic trade and, in short, how much you're going to get paid, how much you're going to get taxed, and the spending power of your dollar going forward. Now, we've got NATO coverage collapsing, basically under threat of having to pay in for the defense spending. Now, the EU is basically panicking about this with the new elections. Their defense spending budgets are basically all in the red. Now, the one that has the strongest spending budget at the moment, Germany. And now, with this, just yesterday, we've got the German Chancellor, Olaf Scholz, no longer going to COP, basically 29 climate summit, because they've got a political crisis at home. Now, this is not a political vacuum. Basically, Europe is facing a lot of tough decisions. They are export dependent in Germany, and if they cannot manufacture, it's basically harming them severely. So now Scholz and the Greens said Germany should suspend their strict fiscal rules. They need to get out of their debt. They need to refinance, restructure it. But Lindner, another head, has rejected that, saying that it is breaching their current constitution. So they're having serious financial issues and don't have a clear path forward as of yet to refinance their debt, as it's not allowed. They can't manufacture out. They've just had Volkswagen announce that they're closing minimum of 3 of their factories. So their unemployment is increasing. Again, we're watching basically another rhyme of history as they're going to suffer severe currency issues. Now, with this, I'd like to bring this forward because this is like basically where we're heading, where we hit these trade wars, sanctions, now currency wars, and the kinetic wars, which we're on several fronts, basically over in Asia against China, also about Iran and North Korea, as well as Russia, all by proxy. And as this shows, it basically all headed towards this new world order. So as we need a solution to all of these things going on, they're going to be happy to provide one going forward. So just like to keep you on top of basically what's going on for the dynamics of these. Now, we've got a shift that just happened globally. We've got Iran saying that the new presidential win is an opportunity for the US to reassess past quote unquote wrong policies. So, again, there is a major shift that there was larger, basically growing concerns on the nuclear fronts as well as other economic fronts. There are large producers, and we're still doing major amounts of trade along with the oil, basically confiscating a lot through them. So we'll see how this shift affects that. We've also got China willing to promote, as they're saying, sound, sustainable economic ties with the United States. This is coming direct from their Commerce Ministry. So basically, China's waiting in the wings as well. And I think they would very much like to get back into the trade with United States because, as I was saying, they also export mostly to the United States. So watching these tariffs that are being threatened on them, basically those pale in comparison to the amount of trade that they've got sitting on the docks already if we shift those prices through the mechanism of changing the rates and the currency wars, and we basically strengthen the dollar when purchasing as opposed to what's going on with her. Now, you have to keep in mind also that every time the United States purchases good through from another country, they are basically giving that country massive amounts of US dollars. That country can in turn pile up those dollars and at a time of their choosing, basically dump those dollars back onto the markets. That's another way that we've really got to watch this currency war, because if they can affect also the basically going rate of the dollar. Now, with this, we've got North Korea talking about the world's strongest missile. Now, they're saying that it's too large to use in war. Doesn't matter. Basically, this is a view into the ramp up and their views as to what they need to be doing rather than focusing on trade, goods, and production. We're focused on defense, offense, and that's not good for the overall, not really sustainable as well. So with all of this major shift, we've got now current administration to speed up arms deliveries, saying that they want Ukraine in the strongest position possible. It is a slow train wreck. They have already lost that one, despite all of the inpouring of mercenaries and goods to support. So with this last thing I want to leave you with, von der Leyen also trying to prepare the EU for war. So just heading down this spiral, and we'll see if we can reverse this. So with this, all of this, I wish you all a wonderful day in general. And until I see you again, my friends, stay free.